Attention A1 Trading Show fans. If you're interested in getting free access to the Edge Finder or our premium trade alerts, listen up. For a limited time, our show's partnered broker 8cap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to 8cap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now, back to the A1 Trading Show.
Good day, guys. This is Kenzo. I hope you are doing great. So today you have me. I think Nick is not really around. So what you can do there on the comment section, you can actually let me know which pairs are you actually expecting, or do you want me, the ones that you want me to actually go through. So yeah, I will try to start with you US dollar index. And as we check on the economic calendar, I don't think we have much. It's only consumer confidence, which is going to be in few minutes, let's say less than 40 minutes. So I don't think that is going to have a huge effect. But the most important one is actually going to be our core PCE on Friday. So this is going to be great. But besides that, we already had rates cuts. So it's like we actually understand what's going to happen from now on. I think the market has been actually trying to digest whatever that happened on the rates cuts. So slowly, it seems like the market is starting to react to that. We started to see gold slowly trying to go higher, Nasdaq and other stock markets like Nvidia and Teslas, they are actually bouncing back. So yeah, I will check gold. I see gold there. So at the moment, as we are still talking about gold, I will start with the dollar index so that we understand what's really happening with the dollar. As you know that almost 90, let's say 80% of the pairs that we trade, they actually go with the dollar. So it's way much better to check what's really happening with the dollar index, because that shows the strength of USD currency, whether is it going up or down, or actually, let's say if maybe actually the strength, if maybe we can see the weakness or maybe the bullish momentum. But at the moment, you can see that we are coming from a very nice bullish move, and we are no longer on that. So which means we expect the market to go even lower. So since we broke out of this uptrend, we expect this continuation of a downtrend. So if you can check, we are very closer to the lowest area that we reached previously, which is this one here. If you draw a line there, you can see that no, man, that is actually around the same or quite similar levels, which means the market might respect that. The market might respect this area and start to go to the upside. And that will not mean that maybe it's a bad thing. No, it will mean that the market is just respecting the previous area that we have, or that we had before. And at the end of the day, the market might still try to go even lower. But sometimes the market might play a role there. You can see that already the market did respect this area. We can say respect this area several times. So once the market breaks out of this, that will be clear that the dollar will keep losing that momentum. I hope that makes sense. So I see gold, I see oil, USD JPY. I will also check that. So let's go straight to gold. Let's go straight to gold. I see Nasdaq, Russell 2000. I think I don't really have a Russell. So yeah, or I never did actually do some analysis on Russell 2000. So this is what we have on gold. On a bigger time frame like daily, we can easily see that we are still on a continuation of that bullish momentum. So which means we expect the market to keep going even higher. The reason behind that is technically we are on an uptrend already. But if we check fundamentals, they all favor this uptrend. We have tensions in the Middle East that will favor a safe haven, assets like gold. So, which means that will be a good thing actually to buy when we have tensions in the Middle East, Russia and Ukraine. That still continues. That is also a plus. So another thing is US did cut their rates, which means it makes the dollar to be little bit weaker, and they are going to continue to actually cut their rates. So which means, yes, that is actually good for this uptrend structure. So from there, we would say, where can we actually look for our buy positions? I think on a daily time frame, it's good for overall a trend. But if we go on a 4 hours time frame, I think things will start to be way much clearer. You will see that yes, we had some structures along the way, and even now here we had an area that we can use as a resistance. So what I'm expecting here is quite similar structure like here. You can see it there. The market might break out there, and we also expect another breakout. So which means we expect this nice move to the upside. But with the moment, with the structure that we have, anything is still possible. The market might still reverse to go a little bit lower, or maybe around these areas before we see another continuation of a push to the upside. But the overall structure, yes, we are still on that uptrend structure. I hope that makes sense on gold. I hope you did understand that. So let me check. Someone said check go Nasdaq, USD, JPY, and oil. GBP USD. Okay, I will check that. I will check that. So let's see. Let's go. Okay, US30. I think I will just start from US30 going further. So yeah, on US bullish momentum, the stocks like actually lower rates, and that we are going towards that. Already they did cut the rates, so that is going to be the topic for now. And we had this resistant area for a quite long. You can see it was very strong. So once we break out of this area, it shows us that the market it's willing to go even higher. So this is the new structure. We no longer have any proper resistance. So which means, yes, there is a room for the market to go even higher, especially on USD. You can see that. So it's like the market has been playing games around this area, but I understand it seems like if you do check, what's happening? Sorry. If you do check US30, so you will know that Nike it's not performing very well. Nike is one of the companies that we that are actually in US30. So and what we have here is the market is actually struggling to break this level, but now I can see the market trying to go a little bit higher. So obviously, I'm expecting to see a very nice push after this breakout. Already we see a smaller breakout there, but it's possible that the market might play around to give us another retest here before we go even higher. But at the moment, it shows us that the market is not really willing to go even lower. So which means that it's actually a very good thing. So I think we have to look for a proper buy there. Maybe once the market already even opened. So on US30, what's really happening on US30? So on US30, we can, sorry. So on Nasdaq 100, I was still focusing on US30. So on Nasdaq 100, we can easily see that since we broke out of this quick downtrend, the market has been giving us a proper structure, so we expect the market to continue going higher. But it seems like the market is respecting this level of a resistance, but we'll just have to wait and see. If the market pushes lower, we'll expect the market to touch this level of a previous resistance. Now it's going to be our support for the market to respect that before we go higher. I think that will be the area that we are going to look. Unless if maybe the market start by breaking out of this area, I think there is a chance that the market can break out of that so that we can have a proper buy. But the overall structure, we can easily see that, yes, we expect to see some very nice bullish moves. And after we had interest rates cuts, I think we don't really have enough or of a bigger move, you see. So that was actually welcomed by the stock markets, but we did not really see any aggressive push. So maybe that will happen this week or maybe next week. But at the moment, we still expect some serious bullish moves. Another one, I think S&P 500 is going up. Let me see. I think someone said check US oil before we go on USD So this is what we have on US oil. US oil, it was on a very nice. Let me remove this. It's still actually on this nice downtrend structure. The market is been actually trying to go lower. And at the moment, it seems to be reversing. You can see that the market has been respecting this level. So maybe now the market is trying to reach this level before we see a proper push to the downside. So this is what we have as a structure. The market is actually going lower. So we also wanted to have some nice sells here, but the market was just reversing. So the solid area that we think maybe the market will respect is this resistant area. If the market breaks out of that, it means that oil will be starting to go even higher. At the moment, I think it's way much better to wait for the market to reach this resistant area. So yeah, let me see. I think we need to go on USDJPY. Are you? Let me see some of the questions. Are you South African? How much do you make daily? Using how much? Yeah, that is a question. So it depends, guys. You don't just say how much do you make and using how much. So the account changes every time. So and how you trade. So if I can say I'm making, let's say, 5,000 rands every day, it's how the market actually works. So to be honest, it differs. Sometimes today you can make 1,000, tomorrow you lose something, then you continue like that. But what I try to do is to be trying to be consistent, you see. So I think the question to me is not really, I don't know. You're not going to learn anything from that question. Because I can say, okay, I make 10,000. So yeah, I make any amount any day. So I don't really have a fixed amount that I can make. So on USDJPY, the market is coming from a very proper. Let me use a bigger time frame. I want you to see this candlesticks nicely. Thicker ones. So yeah, we can see that we are coming from a proper uptrend structure, and after that we see a breakout there. So which means we expect to see the market trying to go even lower. Do you see that? So we are no longer on that uptrend structure. So if we can go closer there, you will see that the market is struggling to go even higher. But what I know is when the market breaks out, most likely the market won't give you a perfect structure. So which means it doesn't really mean that the structure is not really valid, or maybe it's not really a downtrend. But what I know is the market will just play around until we get a proper downtrend structure. So the market won't make it easy for everyone to just jump in on that sell. But what we know is at the end of the day, we are on that downtrend structure. So which means we are going to look for those sell positions. But at the moment, I think this area can be, we can mark that area, or let me just use 4 hours time frame. I will check some of the comments, guys, after I do this. I think this is what I have at the moment. I will mark that area. From these levels, I'm expecting maybe the market to respect this level here, unless if maybe the market tries to break out, because I'm expecting something like this to continue going down or go lower, or maybe we can use this type of a area. You can see we have something there. If we mark this area, you can see that we start to have uh, this type of a move, which is a downtrend structure. So, which means from this level here, we might get another pullback. So, yeah, it's possible. So, we just have to make a notification there. And if you make your notification, that will be much, much, much better for everyone going even lower. So, let me go back on my daily time frame. So this is what we have at the moment. So you can still use something like this, but what I know is mostly once the market breaks out, it won't give you a proper or clear, nice structure. So let me check some of the comments. Which pairs do you want me to check? S&P 500, GBP USD. I think it's not a question. Kenzo, you are over analyzing gold. It will not pull back down that far. This is going up. Yeah, I think we have like it's good to have a different opinion. It's not like maybe I'm over analyzing. I might say the same to you, and you see that then won't look good. But it's better to have your own idea. I also have my own, and this makes trading very nice because we can actually have different ideas, and you can still be profitable using your own idea. We might have different views, but still understand the market. You see, so let me check S&P 500, then we can check AUD. Oh, and GBP. GBP. Okay. Let's go on GBP. So, yeah, you can let me know which pairs do you want me to check. Let me know which pairs do you want me to check. I will also check your comments. So, on GBP USD, I think this is nice. It's quite straightforward, quite similar to what we saw on gold. The market is still actually trying to go even higher. So, but the overall structure here is we just continue with the trend. The market already told us that we are on an uptrend. So, we're trying to follow the trend as I don't really to go against the trend. So at the moment, it shows us that the market is continuing like that. What I like here is the market gave us a proper resistance there and the market broke out. So now we're trying to take advantage of that. So I'm expecting the market to continue going higher. Along the way, maybe the market might try to give us another reversal. Then we can still use it like that. But what we know is we are on an uptrend. So if maybe we have any reversals, we still have the supports and resistance, which are going to help us to take another decision. But at the moment, we just expect to see a very nice continuation of that buy. But what I see here is it's like the market is now tending to be creating another inner trend, which is going to be maybe like this, because this area of a support is quite far. And if the market bounces back there, I think we will need a serious fundamental for the market to push the market to reach these levels. But at the moment, I think the market will just continue like this. I think this is a very nice bullish structure that we can look for a buy, and I think the market will continue like that. I think the market will continue like that. Remember, I think it's last week, Britain, I think, did not really cut their rates. And remember, US did cut their rates. So, which means it makes the dollar to be a little bit weaker against GBP. And that's why we start to see this type of bullish moves. So, let me check the other one. S&P 500. S&P 500. Or let me just push it like this. Okay, gold is still going to go higher. Let's see. S&P 500. S&P 500, I think this is a very nice bullish structure. You can see that. But what we have now, you can easily see that the market, I think it's 1, 2, 3, 4, 4 days straight, the market is respecting this level. Or maybe let me show you this on a 4 hours time frame. On a 4 hours time frame, you can easily see that the market, after we broke out of this resistant area, this second resistant area here. Once the market breaks out of that, obviously we will actually have to jump straight to that. If the market doesn't really break, it means the market might try to reach our support area, maybe for a proper retest before going higher, because I'm expecting to see some very nice push to the upside, especially from S&P 500, gold, S&P 500, Nasdaq, and US 30s. Maybe even a Russell 2000. I think I will have to check Russell 2000 also, but it's not my. I never actually did check that, but I think I'll have to check that. So let me check GBP USD. I think I checked GBP USD, AUD USD. Let me check AUD USD. So guys, if I don't really see your comments, I will try to check that. I will try to cover as much as I can. I will try to. It's not like maybe I'm avoiding your comments. So on AUD USD, we can easily see that, whoa, this it's actually a proper uptrend structure. Maybe someone can see it like that, but we are coming from this nice downtrend. We got a breakout. Now the market is now going even higher. So we expect a continuation of this buy. Remember, guys, the way you saw US, let's say US index struggling and going down, it means the dollar pair or currency to be weaker. So which means most of the pairs that are going or with the dollar or USD pairs, they are going to gain some momentum. And I think this is what we see at the moment. We're starting to see that starting to take shape. Slowly, those interest rates cuts, they're starting to take shape here. So even go maybe on 4 hours time frame for those who maybe want to jump in here. Oh, we are already on 4 hours time frame. I think if you missed this move around maybe here, once we get the breakout, we'll have to understand what's really happening around this level. Maybe the market is trying to give us another resistance. Let's see on a smaller time frame, on a medium-sized time frame. Let's see. I don't think it's nice and clean. No, I don't think it's actually nice and clean there. But what I see here is you can also use maybe this type of a method. But sometimes when the market is moving aggressive like this can be quite steep and the market can just break that quite easy. But you can still market these areas with that. But sometimes it won't be that reliable as much as we have this aggressive push to the upside. So I think for our time frame here, it will be much better. Maybe you will see what I'm talking about. You can see how steep this thing is. So which means the market might start to give us a resistance here, and it might break that. And if maybe you're relying on this only, you might think maybe the market will be trying to sell, but to find out that the market won't keep up with this type of a steep move. So sometimes the market will break out and still continue going higher. So which means this is not really necessary at the moment. So yeah, I think we just have to wait for something to happen before we get a very nice push on AUD USD. So let me see. Let me see other ones. I entered at about retracement. Hello, can we check gold, please? I think we did check gold. Can you check DEX? Okay, I will check DEX. Let me see. Let me check DEX then. And GBP, I already checked that. Also, JPY manufacturing PMI. Sorry, I talked about Nasdaq. AUD JPY. Okay, I think I'll have to check what I was trying to check. Oh, DXY, not DXY, DEX. So what's really happening on DEX? I think we can easily see that DEX is going higher. DEX is going higher before we even throw anything there. So this is actually an aggressive bullish move there. So let's see if maybe we can get something. We can easily draw something that can actually help us to enjoy some trades here. Let's see. I think the market is already showing us that it's going up. So this is actually a good uptrend. Let's see that. This is actually a very good or aggressive uptrend. So this is what we have at the moment. So we can try to see if maybe there's other things. I think on top there, we can mark this as the area of a resistance. So we can see the market, it's moving away from that as it's respecting this level. You can see that. So yeah, we are still on that uptrend. I think this area, it's also something. These areas, they are, you can see we had some consolidation around this level. So something like this. So we are actually on a very nice uptrend. So if maybe you are looking for a buy, I think we can wait for the market to break out of this resistance, as the market seems to be respecting this level, before we look for that buy around these areas. Or maybe the market has to reverse a little bit. But if we look at this nice support area, this will be a sort of a wedge structure. You can see this area. So now the market might end up playing around this area before maybe we have this breakout on top, or maybe breakout on the support area. So we have to actually wait and see. But a better breakout there, that will actually help us to actually decide what we can do here. I think this market is on USD and Nasdaq. All these markets are around the resistance area. So it will be up to the market if maybe we are going to break these levels or not. So let me see. I think maybe we need to check gold, AUD JPY also. Let me check gold, then we can go on AUD JPY. Let's see, gold. So now on gold, we are on gold. We're waiting for a nice breakout. So if you check, let me remove this. So if you check this, the market, this was the time of a rate cut. So this is the overall structure from gold. You can see that. So let's go closer and see what's happening. So you can see that after we had some nice breakout here, we never had any proper reversal. So there is a possibility that around these levels, the market might give us a sort of a resistance. Maybe we might have a nice a sell-off, or it's possible because fundamentally things aligned very well with gold, as I explained before. I think this area might be broken out and we might see a continuation of that buy. So as the structure, it's actually telling us that we are on this bullish move. So it means we actually favor a bullish continuation. So let me go on a smaller time frame again, just to see what's really happening. So you can see that we have different steps here. We have this area, that area, this area. So for me to not get confused here, I can't draw a line like that. So it means I will just have to cover everything so that I don't really get confused. I can do something like that and say, once the market breaks out of this, I will actually look for that buy. So which means something like that. Let's see, something like this. Maybe as a buy pending order, and say if maybe the market decide to break out, I will look for something like that. But there is a possibility for the market to actually bounce back before we see a nice push. You see, so yeah, on gold, I think that it's going to be fine. So gold, how could we still not crash yet? The mood for gold continues to be short, so I think you need to continue to buy. Okay, so let's check AUD/JPY. AUD, do we have AUD/JPY? Nope. Let me just add AUD/JPY. AUD/JPY. Any pairs that you want me to check, I will be checking those pairs. Yeah, it seems to be flying. Okay, 4 hours time frame, that will be a very much better time frame for me to actually. Okay, it seems like already did some analysis here. Okay, let me just yeah, I think it's fine. We are coming from a proper aggressive bullish move, which the market actually broke out. You can see that. So we were going up like seriously aggressive, and then after we see the market breaking out, so it shows us that the market we can actually say we are on a downtrend structure, and we expect to see the market continuing like that. I think this is a very good area for us to look at. I think if you check this area, so this might be a very good, nice structure, but we can't mark this one, sorry, because at the moment we just have this solid structures, but it makes sense that maybe the market might move like that. Do you see that? So another one, we can use actually a horizontal structure. As we can see, these areas were actually resistance areas. So if we draw something like that, that will still make sense. And I think we need to do that. Let's see. This was a nice smaller horizontal, ranging structures. So, but from here, we can make it a one zone where market was respecting. So on the bottom side, I will use this one only. It's where the market actually reached. So, and again, this might also make sense, but it's fine because we also have this horizontal resistance. So if maybe the market bounces back, we will understand that already the market broke out of this uptrend structure. So which means we expect the market to change the trend to a downtrend structure. So, and where we are, we can easily see that the market is actually playing around the resistance. So I think something like this can actually work very nice, work in our favor. Don't just jump work very nice. So once the market doesn't really, if maybe the market tries to break out here, it means maybe the market will be trying to reverse. But for now, I think this can be a very proper sell structure. So news in 5 minutes. Please tell us what is the importance of it in the market. Let's see, what are those consumer, whatever. Let me see.
Hey, Kenzo.
What is the. Oh, how are you, man? Sorry.
Hello. Looks like we have another guest on the way, and so we appreciate you coming on when you did, and yep, and I'm getting my shout out. So I'm not part of the show. Nobody pay attention to me.
Okay. No, thank you very much, and also your viewers, man.
Oh yeah, we've been putting your information in the chat. So guys, go click on Kenzo's link here, subscribe. It takes 3 seconds, maybe not even that. And you can get more of him when he's not on our show. He does his own content. He has a lot of value over there. So Kenzo, thanks for coming on so early while Nick is gone, and we really appreciate your help.
Thank you very much, man.
All right, guys, we're gonna move along to Ivan. We got Ivan. He's gonna take us into the next portion of our show. So we'll be with him right after this.
If you're someone watching the show right now and you're outside of the US looking for a better brokerage, listen up. I wanted to take a moment to mention today's live stream supporter, Vantage. Vantage allows traders outside of the United States to trade CFDs. You can trade everything from commodities like gold, you can trade US indices or global indices, and you can even trade FX all under one brokerage, and you can connect to MetaTrader 4 and trade directly on tradingview.com. Not to mention, they also have a really good sign-up bonus going on right now. So we'll drop the link to that down below in the chat as well as in the description of this live stream. Check out Vantage. Now back to the show.
Sibonello, he ruined everything. I am coming on, and you're like, everything is horrible. No, you're supposed to be excited. You're supposed to be happy. You're supposed to be like, oh, what's going on? There's a fantastic dude coming. But I can give you the news. Don't worry. It's just consumer confidence. Like, what up, bro? It's not, well, on this one, it's just only yellow folder, and I don't see the strong folder. So, praise Lord. Remember the thing from yesterday? So yeah, yen is bearish. Can you imagine what is going on? How right was I? Okay, cool. I told you yesterday, by the way. So for those who's wondering, this is part 2 from yesterday. So if you feel like this is gonna be a fantastic 15 minutes I have right left now, then yeah, stick around. And if you think this is gonna be horrible, then sure, sorry, 15 minutes and you can go back again. Okay, number 1, consumer confidence is good, but we need to look at what it is, and I'm not really too caring about it. Let's see what it is. Supposed to be 104. Last one was 103. 2, 1. What is it? No. Of course, it doesn't show up immediately, but whatever. Can you do it then? No, thank you. Since everyone is interested in news, that one doesn't show. Okay. I need to see the report. Oh, kid. Okay, I need to see the report. Want to see the report? Report. Where is it? There it is. Conference board. Cause that's a quite conference board. Thank you very much. Cool. Oh, it's currently unavailable, apparently. Sorry. No, it's unavailable. Should I buy? Should I stand up oil buy? But you know what, Laura? Let's go through that. By the way, we have been kicked out of the conference boards. We don't know what the conference is going to be, but we'll take it later. I want to talk about gold, though. Can we talk about gold for 2 seconds? Thursday, Powell speech that will be important on the labor market. Yes, we are going to give a couple of 2 seconds about that one too. But gold, for that matter, for the second, somebody said, I don't know what it was about, but somebody said that gold should fall for whatever reason that was about. And I think that is, I'm just going to say it very clearly, that's a very dangerous theory. In my mind, in my head, to say that gold should fall. Because what are you telling me? It's actually going higher, right? It's actually going higher. How can you tell me something is going to go lower, right? So remember that. Remember to, where's the trend going? Where's things going? It's going higher. Why do you think it's going to go higher? Why is it going higher? Do you think it's just because, we are bumbo jumping around because somebody fell in a banana split and then we went higher? No, there is actual economic reasons. There's actual people have done serious research and they have found out that gold should be higher. Okay. How much will it affect Dow Jones? Probably make it fall of it, to be honest with you. But yeah, I'm just trying to find the gold comment from earlier because I found that to be very interesting. Gold is due to a pullback. I think prices overstretched after a dip in the stock market. Everyone is buying dollars, so they should buy so they can buy stocks. I don't agree with that, Leslie. And the gold comment is somewhere here, so we will just do Control F, I guess, and then do gold, and then see if I can find gold. No. Yeah, okay, cool. I found it there. Gold is all-time high. Could we see it? Could we still not see a crash? Sorry. How could we still not crash yet? You know, mate. I think that's Milky, right? Milky Way. You and Leslie, you need to get your head out of the sand. I'm going to be very blunt with you. You need to be very serious right now. Okay, this is investments. This isn't jokes. The thing is when something has decided something should happen, it's for a reason, right? Gold is very, very directional. Why is it directional? Because a lot of money has gone into buying it. And until you see a peak, and still you see, it's kind of like it's cold outside. It's middle of the winter for some people. It's cold. It's going to be cold for a very, very, very long time, months. So if that's the current season in gold, if this is a heat, summer is hot. If gold is hot, we're gonna go far and long on gold. You know what I mean? You know what I understand? You understand what I mean? I mean, you should do your research, and for as long as the reasons are still here and they're still the same, which is low inflation in America, which is lack of growth in the economy, lack of growth in the economy in the general in America and in the world, that China is doing absolutely horrible at the moment, and you're seeing that people are getting scared, and people are seeing war and whatever in the Middle East and in Europe and whatever. As long as you have the current conditions, which in terms of risk on, in terms of risk off, in terms of growth, in terms of economics, in terms of interest rates, in terms of peaking interest rates, if Fed says tomorrow we're going to start hiking interest rates, you're going to see gold saying, "Woo!" All right. So I don't know what the price is going to be on gold. But there's nobody in my class that's going to say, oh, it should peak. Oh, it's overstretched. Oh, it should this. Oh, it should that. You have to look at the drivers. It's always going to be the drivers. And forever it's going to be the drivers. And what has been the drivers in this market? Everyone was waiting for the Fed to cut or think of cutting. And you're wondering to yourself, how is that possible? It is very possible because they hadn't decided yet. And now they decided to do what happened 12th of September. A bit lower CPI. Boom. Breaks out. I saw Nick on his live stream when he was doing it. Great. Gold full bullish. Yes. That's what the market is telling you. Same thing with yen pairs. Somebody said yen is weak. Why is it weak? Why is it going higher? And I saw Kenzo wanting to short it. Okay, cool. What's currently happening? What's currently in Japan? What's currently happening in Australia? What happens in America? What happens in New Zealand? What happens in all the other currencies against yen? What is the economic situation? That's what drives the market. Because what is yen? What is the yen price of? It is the value of the economy. That is beyond trend lines and patterns and wedges and SMCs and value gaps, and I don't know what else is out there. RSI and overbought and oversold and overstretched. And if you stretch something too far, yes, you're going to get a pullback. But something that moves higher, especially when it comes to gold, when it comes to lower on dollar, comes to higher on yen pairs, it is for a reason. Don't fight something that is already there, already telling you. It is just about to tell you even more. And that's why we always have fun with the what do you call it in English? We call them my FX book and the Outlook, where we are having a bit of fun with that. Generally, a lot of traders is short euro, but it's going higher, 136 pips in loss, 299 on pound dollar, 384 on dollar yen. Why is that happening? Why is NAS 100 silver going down? Why is DXY after this? It was a very clear direction. Okay, let me tell you. All right, so S&P. So S&P going a bit lower, slightly, very little movement, by the way. But dollar S&P lower was because it was less confidence in the economy. What is less confidence in the economy? Less sales, less money to businesses, less development, less growth, less. Why is dollar falling? Because we're going to cut interest rates even more. Because the economy is doing poorly. Because poor economy means lower interest rates. Lower CPI means lower interest rates, means lower dollar. Why is the dollar demand for dollar falling when we have lower economic growth? Because the demand for dollar goes away when the returns on holding dollar goes lower. It's all money, people. It's all money, my friend. It's all money. Did I forget how to laugh? I think we forgot how to laugh. So, from yesterday, I said Australian dollar is bullish, US dollar, right? And I said it wasn't a good pullback. All right, cool. And I said what? I said higher high, higher low. What happened? Higher high, higher low. I don't know if that's what you were doing. I don't know what you did. But I know it is going higher. And why is it going higher, Brasir? Because that is the direction you were holding from yesterday. And I saw that a bit later. And I think, okay, cool. You got the direction. The question is, Usama, where is Nick? He's not here. I'm here. So let's work together. So let's go through it. Australian dollar, US dollar is going higher because of lack of inflation, because of lack of growth, because of pricing in interest rates going lower. Therefore, that makes dollar weaker. For everything else, Australian dollar becomes equally stronger when dollar gets weaker. So this is the pair to look for if you're going to get if you really want a directional trade. Same thing with New Zealand dollar. What do you mean? It's because the biggest country in the world, we are not equal in sizing of economies. So if the biggest economy, the one that has the most amount of money, does something, everyone says, yes, sir, yes, sir, yes, sir. They're just following orders of what dollar does or it doesn't do. The opposite. Why is that happening? Because where the dollar is doing what it's doing, everyone is doing opposite. Why are they doing opposite? Because the weakness in dollar / the returns is going somewhere else. Where's the highest returns? The ones that has the most volatility. Who has the most volatility? Australia, New Zealand. During COVID or after COVID, during 2020, 2021, Australian dollar, US dollar had the best performance of all the dollar pairs, and I think it was about 40 to 50%. While dollar Australia US dollar CAD was like 8. Right? Tony says gold is still bullish. Of course it is still bullish. It will be still bullish until we hit the peak. Where is the peak, my friend? It is just the same as when you're climbing Mount Everest. Where is the peak? It's gonna be far and beyond your imagination of what you think you're able to climb. Okay? Why am I saying that? Because there's a mentality issue in this chat somewhere in between the lines. The people are saying we should peak on gold, we should peak on dollar, we should peak on Australian dollar, we should peak on this, we should do that. No, sir, we shouldn't. We shouldn't peak. Yes, we need to take profit when we are reaching our desired profit target, which, by the way, on the Australian dollar, US dollar, this week is 68.92. Are you going to take your profit there? Totally up to you. Not financial advice. I'm just saying that's what the pivot point says. But I'm telling you that your way of doing things is always going to be, are you able to predict? So are you able to do it again and again and again and again? Cool. Gold should go to 3,000. Who knows? Who cares? But as long as you're sitting in that train and it's going higher, who are you to say it's going to go lower? Because everything, not everything, but most of the indicators currently is bright hot on gold. Okay. Dollar pairs, dollar falling, making new higher highs. You're welcome. New Zealand yen was requested for. Nero asks, what do you think about oil or US oil? How does the current USA economy affect it? It's both. So higher oil price makes higher inflation, and lower oil price makes lower inflation in America. Well, the weak gold sensitivity affected, yes, but not as much as the current situation. It might do. But yeah, I'm sitting on gold buys for a while and going good. Yeah, great. Have fun. Don't listen listening to naysayers. Don't listen to me, by the way. But for me, my exit plan for a currency or anything that I say, if we get down to a new lower low, so we break the previous low, that's kind of the end. That's how I price action get out. But, you might not get the best price. You might get less than you thought. But at least you're avoiding those ones. And that fall is like a 400 pip move, at least. I think it was. So, 40, 50 pips difference. Like, this is what? 70 pips less. Sorry, not 50, 70. 60 pips less versus 400. Why not? So let's go to New Zealand yen. Going great. Today was a good day to buy. Yesterday was a good day to buy. Yesterday was a good day to buy. And the day before that was a good day. And the other one, there was a good day. And what are you going to do tomorrow? I don't know what you're going to do tomorrow at 90.5, which is very high, by the way. You might be buying again at 90.50 or 90.20 or whatever that is at New York close. But we are bullish. And then I think it was Kenzo who did, new R highs and, looking for a short. Yeah, I believe you. I believe that's possible. But not now. What do you mean, Ivan? We're still higher highs. We're still the same thing on gold. The train is still higher. We're still making higher highs. We came to 91. That might be the peak. Who knows? But it's not my peak. Pivot point says 91.60. We didn't hit central pivot, which is 88.50, which means to me we are fragile. So we might peak at 91, but that's not what the current price action is telling me. It is currently higher high, higher low, higher high, and then potentially higher low. Until is broken. It is matter of the fact. What do you have? Don't go blind. Don't imagine things. There is no beautiful women here in this chart. Okay? It's a beautiful chart, but no beautiful women. Boom. Pound yen. Same situation. Higher high, higher low. Maybe peaking, maybe not. Who knows? Who cares? It's still continuing higher. It has gone up to the previous high. That might be the peak. And then if you invest 100 pips in it, you might lose or you might win. That's about coming down to your strategy, come down to your. If you try to trade in this direction, what happens and what you're supposed to be doing? You're supposed to be trading down here. Well, did I do that? No. Personal reasons, I didn't do that. But that's where I believe that's where I am most confident. So if you think that up there is going to be a great value for money, okay, cool. All right, cool. Then continue. If you're a trend trader, if that's what you're going to do. But this one should continue until Jesus returns. Or until we make it low. Until that then. Nato, how are you? I'm very great. Good morning, traders. Good morning, Chris Pulver. Happy to have you around. SPX pound yen is a strong resistance. What about fundamentals? I don't know. Notice here, I can talk to you about resistance, but yet again, I'm talking to you about what I just talked about for probably the past 20 minutes. Is strong resistance isn't resistance until it makes a new lower low. What do I mean? Is I'm just trying to debunk something here. Is that where you think, for example, this is strong support, but it was broken. This is strong support, but it was broken. This is strong support, but it was broken. It was strong support, it was broken. You can shout wolf, wolf, wolf. This is strong resistance. It might be the resistance we're waiting for. It might be the peak we're waiting for. But we don't know until we have, in my eyes, have a new lower low, have declared exit rules, whatever your exit rule is, or your clear, what do you call it in English? Your clear rule of not engaging anymore. That's all that matters. Because I still see trend higher. But I don't know what has happened in the previous 10 minutes that may send this one lower. But until then, it doesn't really matter because don't go blind. Don't become too afraid just because you see something. Go by facts, go by rules, not emotions. And have fun, maybe. Is pound yen strong fundamentally? Absolutely, yes. No, okay, I'm thinking about it. The yen is weakening because of the lack of increase of interest rates in Japan. So it is strong for now. Economic data doesn't apply to yen, apparently. Hi, Brokena. Glad to see you as well. Even though American indicators are cooling off, I think S&P 500 is still going to go bullish. Yeah, those are not necessarily opposites. Slowing in economic data for the economy, yes, is not great as long as they still publish profits, but that also equals to lower interest rates, which means less costs. So less demand, less costs, you might be equal out of it. And in the end, as long as you don't have a bubble or a crash of some sort. All right. Yeah, if you want to take over Chandler. But yeah, cool. So my mind is look for pullbacks on yen pairs, which you're currently having. Look for dollar pairs yen pullbacks if you get it. This one didn't give you. S&P 500, in my mind, Chris might be disagreeing with me. I think it's going to go higher for a bit longer. But until if it makes a low, it makes a bearish trend. Great. I'll take it.
Hello, Ivan.
Hi.
We're going to move the show along to our next segment, but I want to thank you so much for coming on when you did. We like having you on. So I've been putting Ivan's link in the chat. So guys, go click on that. It takes less than 3 seconds to subscribe to him, and then you get all of his content that he puts out when he's not over here with us. He's also in our VIP Discord, where he does exclusive webinars in there. So check those out. There's a lot of high value stuff. So Ivan, thanks for coming on.
Thank you very much for having me.
All right. We'll see you next time. Okay, guys, we're going to move along to our final segment of the show today. We're going to have Chris Pulver on. So stay tuned right after this.
Hey everybody, thanks for tuning in to today's A1 trading session. We love engaging with our audience, talking shop, taking requests, and sharing our favorite setups. It's about that time where we're going to review a bunch of indexes, stocks, currencies, gold, silver, Bitcoin, and pretty much anything else and share our insights. If you're wondering what trades I'm in, if you're wondering what trades I'm taking, and you'd like to see exactly how I'm trading everything, you can actually follow my trading signals. If that sounds like something you're interested in, we'll share a link in the chat and you can sign up. You can sign up directly with the link or speak to a support rep if you have any questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show. Hey everybody, happy Tuesday. Welcome back. Just getting started for the morning. We had consumer confidence came out, gave us a little bit of a down candle. Price was fairly quiet. We just were shy of the all-time highs right here from Thursday last week. We opened up above yesterday's high, but we also took out with price action yesterday's low. We've actually turned the week red for right now, and price seems to be going a bit lower. Now we're only about like 0.4, 0.5% of movement right now. There's a 0.53% high to low. That actually will reflect in today's price action. I mean, if we open up here, now it's going to read from yesterday's close, and so it only shows like, oh, we're only down 0.3%. But what we see from the open to rip right now, we're about 0.5% to the downside. So you can see we've got some red in the S&P, some red in the NASDAQ. The Dow is flat. The Russell is flat for right now. I'm going to continue to monitor a couple of positions. I took a SPX trade this morning. I'm out of the trade with a small loss. It's trading at 380, 370. So it's actually down about 70 or 80 cents. I'm monitoring this one because I want to see if my decision to exit the trade early for a small loss was the right call. So far, it looks like it is. But I'll monitor this because if price is going to do something along these lines, if price were to stabilize here and then work its way back up into kind of the close from yesterday, then that initial SPX trade is going to be just fine for profit. The other thing that I'm going to be monitoring today, I posted this in my alert section for futures. Here is a trade with the ES. It's a 0 DTE, or it's an expiration for today. And here's the trade. So I'm looking for a profit trap. I started out the trade right around here, around 57.85 to 57.85 to 57.90. Price has fallen below that. So what I'm looking for is by the end of the day, if price just stabilizes and comes back into my profit trap, then there's a potential to make like $200 to $300 a contract here. If it closes lower, then I'm going to lose about I think $190. So it's, if I lose, I lose. If I win, hopefully we see price stabilize and come back into the profit trap by like 3 or 4 o'clock today. So that's one trade I'm going to continue to monitor. We will see. And then I'll watch the SPX trade as well. I did get some chart alarms going off in China stocks this morning, which I think is a good thing. So here's my SPX position. I'll keep an eye on that one. So China, let's take a look at FXI. I had a big gap to the upside. I did a roll on FXI. Let me get my tracker here. So tracker FXI. Where was that at? Allocation. Diagonal spread. I closed out for profit already. Here we go. So here's my tracker. I know the numbers are small, but I have a break even at 24.26. And then I went to a $29 call. So let me double check that here. And we're trading at 29 and change already. So is that all that I have on FXI? Let me see if I have any other exposure. So FXI, let's go all accounts. FXI, have some shares, have them covered. Got a naked put at 23.85, got them covered at 29 bucks. I may roll this, I may not, but bigger positions are probably in Alibaba, which I have some shares. I have some credit spreads. I have some ratio spreads. Right now, Alibaba is up around $10,700. Go to Baidu. Right now, Baidu on the day is up 37. I'm still down in the net position, but my break even on Baidu is actually in the low 90s. I have a lot of these Baidu trades covered at 115, covered at 130. Have the 80 by 50 bull put spreads, 90 by 80 bull put spreads. These all are looking much, much better for some profit. So that's kind of the extent of my exposure. I also have JD.com. Let's see if JD got a rip to the upside as well. So let me watch this one here. So JD.com, we're trading at 32. Ooh, nice. What do I have on JD.com? It's right here. Have some shares. Have a long call. Let me see. I'm going to check and see what I kind of put the same campaign trade on for a lot of the accounts. So I've got a 13 by 32. I think I might be taking profit on this one. 13 by 32 for $14.78. Now let me see what this is trading for right now. 17. So it's only one contract. It's maxed out around $19. It's trading for 17 right now. Is it worth watching JD go up like crazy? I think I'm going to take the profit. So let me see. I don't know if I want to. I don't want to roll this necessarily. It's already trading for $17. So let me figure this out. Just doing a little portfolio management. So yeah, if it's above $32, get called away for $4.22 a contract. $14.78. So I've got a $14.24 debit to a $14.78 debit. If it's taken out right now, $17.61. Let me do the math on that. So my max profit would be around $19. So if I get 17.61, max profit at 19, I'm making about 92.6% of the profit if I take it today and I don't have to wait until November. That net position would be, if I take it for 17.60 minus the debit at 14.24, make 336 a contract. So little profit action there would be totally fine. And then I can reestablish new positions, which I'm probably going to do. Let me see if I can get, let's try to get 1762 out of this and close this. 1762. Not filling. Let's go 1760. Not filling. The mid's trading at 1736 apparently. Okay. Well, if that's the case, I'm going to sit on it a little bit longer. I'll come back and check on this one. But what I might end up doing is putting in some fresh trades on JD.com. So this one, same thing, a 13 by 32. A 13 by 32. I'm also way farther out. I didn't realize that I went out to like 2026 on this trade. This is a December. This is an 815 day expiration. So I'm way out long on JD. So yeah, I guess I should try to roll this then. Let me see what a roll looks like instead. All right, before I can save that later, but P&L's up on the day. That's fine. I'm going to continue to monitor price. I'll watch my ES trade, watch my SPX trade. Everything is okay. Gold still up. Let's just do a little spot check on everything here. So SPY sitting up here near the highs. I'd said last week after we had the Wednesday close and the Thursday push higher that we're probably going to deal with some indecision in this area. Bears might threaten somewhat, but not necessarily break below the FOMC lows from Wednesday. And then, bulls, of course, would be, if they're threatening, they're making all-time highs again, which is a good thing. We did have a pretty decent miss in the U.S. Consumer Confidence Report this morning. Forecast of 103.9 came in 98.7. So that is, 5.2 points off, which is a pretty big whiff. But we did have some beats before that. I think the market got a little excited with, we had a previous print of 103.3 and then forecasted 103.9. So unfortunately, that was a miss, and price is kind of reflecting that right now near all-time highs. I did take a look at the AAII sentiment report this morning, which I know is also in your Edge Finder. As of last week's close, we're showing about 50.8% bullish, 26.4% bearish. The 1-year bullish high is 52.9, which was in December. There really wasn't much of a pullback from December to January. From 2023 into 2024, the market barely pulled back. It was like a 1 to 1.5% pullback in January, and then the market ripped like crazy. However, we also printed a similar high. It was actually not quite 52.9, but it was getting above 50 when we had the top in July. So it's a little bit on the high side for bullish sentiment. You can use this a lot of times as a contrarian indicator. And then I went to the CNN Fear and Greed Index. Market momentum is showing greed. Stock price strength showing extreme greed. Stock price breadth showing extreme greed. Put call options, greed. Market volatility, neutral. Safe haven demand, neutral. Junk bond demand, extreme fear, which I thought was interesting. Which I don't think this is true necessarily, because this says extreme fear, but the spreads are actually relatively tight. If I go into JNK, we're actually making higher highs on JNK. So between JNK and continuous jobless claims and initial jobless claims, those are the things that would be potentially the data points that I would think can kind of trigger the sell-off. If credit spreads or junk bonds get wider, then that means this instrument goes lower and goes sharply lower, like it did here back in 2022. Deleveraging started in 2021. 2022 was pretty much a steady bear market for about 9 months, and then we stabilized. Even the dips we saw this year in April, it went down a little bit and then stabilized. Even in July and August, we went down and stabilized. So we're not seeing any real outliers here. Price obviously is going to move with that. So if you see this instrument going lower, you're going to see the index prices falling with it. So it's not like you can see this lead and then the indexes fall with it. If that does happen, that's even an easier signal to be potentially, bearish, but typically they're going hand in hand. Okay. All right. So let's talk, get rid of that one. I was looking at putting on some trades with adding some exposure in DIA, probably adding some exposure in SPY. Russell, as much as I want the Russell, and I hope that it still gets there. Look, I want the Russell to catch up in all-time highs. I think that'd be a nice little milestone for 2024 to see that the SPY hit all-time highs many, many times, as did the NASDAQ, as did the Dow. And let's see if the Russell can do the same thing, because this index would still have about 10+% to get to those highs. I'm looking at over 11% from current price to get to the all-time highs. So there's some catch-up space in the Russell and small caps. The issue is it's 2,000 stocks, and maybe 200 of them are performing well, and the other 1,800 are not. But I just don't want to go into like this narrow concentration when the Dow and the S&P are performing better and the market breadth is spreading. I mean, you get 500 stocks in the S&P that have gone from Mag 7 to, semiconductor plays to then broadening out into utilities and energy and other sectors. Where did everyone know that NVIDIA is no longer the top performer of the year? I took a screenshot of this morning. Okay, does anybody know what the top performing stock is this year? Don't Google it and look it up. If you don't know, you don't know. Okay. The top performer this year is Vistra Corp. It's an energy play. It's up 180% year to date. NVIDIA is still up 134%. Constellation Energy Corp up 118%. Aerospace up 80%. Targa Energy, NRG Energy. It's funny. It's like you say that, it's just redundant. But it's Progressive, of course, you're getting dinged on car insurance and home insurance. Good luck. Progressive. They're freaking commercials. Anyway, that's your top 10 performers for the year. So I mean, NVIDIA is still hanging in there, but NVIDIA was dethroned as your top performing stock. It's really being replaced by energy. You've got the utility plays doing really well, energy doing really well. So thought that was pretty interesting. All right, let's move on. Volatility index. We're still in the teens. It's nothing that I'm really thinking we need to be alarmed about. I will be long volatility. If we come down to 13 or 12, I'm getting long volatility through the rest of the year. I'll put on a trade that's probably, again, hypothetical. Let's say we hit 13, okay, 13 or 12.50. I will probably get long with like a $15 or $16 call, maybe even a $20 call, and just throw it out there towards like end of the year Q1 and any type of vol event, trying to get that thing to turn in. Maybe I can turn $1. I'm not drawing that very well because it's yellow, but if I get a trade that is a dollar call option that all of a sudden rips and we see $7 to $8 a movement, I get some value that maybe lets me trade that $1 call option and close it out for $3 to $4. That's a pretty good return on capital. So anyway, that's where I'm at. ASTS, not sure what that is. Let's take a look. Space Mobile. I don't really know a lot about it. I see history back here into 2019, coming off of lows into the dollar space. I mean, this is probably something I'm not going to trade, but it was up 1,800%, which is pretty exciting after the fact. Doesn't really do me much good now. But if I look at the stock itself, let's go to check out the fundamentals. So ASTS, Space Mobile. Highly volatile, does not have meaningful revenue. Shareholders have been diluted. Let's look and see what price to sales, price to earnings look like. Price to sales 3,000 times. Price to earnings -29. What? Current price $26.61. Fair market value $1,000. I don't know what I'm going to do with that. Is it optionable? I mean, you look at its competitors, peer average 7.3 on price to book. This is 29x versus an average. So it's 4 times the valuation. Let's see. That's crazy, man. I've never seen. I have not seen fundamentally something that's looking to be this type of ridiculous price. But it's already up 1,800%. I mean, it's not expensive. If this stock ever is going to $1,000, I guess now's the time to buy it. But I don't like this trade. I don't know. I don't know why we went from $2 to, $40. What does this stock even do? Building broadband cellular network in space. Okay. So is that actually helping like on Earth broadband? Or is that like everyone that goes to Mars or the moon gets ASTS cell phones? I don't know. So, I mean, if it's optionable, maybe I do something with it, like a naked put. There's options. So how about a leap? How low can I go? It's trading at 25.96 right now. I could go all the way down to 750 and say, yeah, sure, give me a $1.45, give me 260. There's obviously risk on the trade, but if I was willing to say, okay, I'll take shares at $10 and 750 and even $5. Okay, let me get rid of this one here. I mean, I could generate $500 of income, not taking a single assignment, and have this stock, over the next year go up. Like, that's not a bad play. It only ties up about $380 of buying power. If I take the shares and assignments, I mean, I don't know if there's any liquidity to add covered calls. Let me see what that looks like if I add covered calls. So if I did something from current price, if I did something 30 days out, hang on a second, bro. Let's see what a 30-day to 38-day covered call looks like. At the money, it's not bad. I mean, getting $3 to $4 for a covered call, you can definitely do some quick cost basis reductions. So I would say that you've piqued my interest, but I have little to no interest in buying it now. So yeah, I mean, a 10 to 5, if I'm going to own some shares, 10 to 5, somewhere in this ballpark. And if this is going to amount to anything, then perhaps either I collect the income, price goes higher, and I turn $5.74 credit. I could probably take 50 to 75 to 90% of that credit without ever having to wait to expiration if price goes higher. If price goes lower, I'm essentially expressing I'm willing to take the shares, and my break-even price would be something to the effect of, let's go out to that January expiration. So if I take shares at, let me do the math here. So if I get assigned at 10, I get $2.60. So that's a 740 break even on that tranche for 100 shares. If I do the 750 minus $1.45, that's 605 break even. And then for $5, that'd be a 4.35 break even. So if I add those together, 4.35 plus 6.05 plus 7.40 by 3, I'd own the shares at $5.93. So the risk is the stock goes to zero and I lose everything in it. So if I own 300 shares, if I did one contract each, I did 300 shares at 593, I'm out. Let's say I'm multiplying that by 300. My max risk would be about 1780 with upside that could be, pretty ridiculous. Even if there was any assignment in this area and we go back up to this high from 2024, break even at what, 593? to recent highs that we saw around $40. I mean, that's what, an 8? That's an 8x return. So max risk around $1,700 and make over 10. I mean, it sets up for a good opportunity. The problem is I don't have a lot of history on it, and this is a fairly new company. We're headquartered in Texas, 2017. I think what I'm going to do is I'm going to do just a bit more exploring, because what I don't love is this: does not have meaningful revenue. So where is this company getting its financing? Right? Like right now, I mean, to get into the tech space, to have no meaningful cash flow or no meaningful runway for cash, not be profitable, all this shows is trading at below estimated value, earnings are forecasted to grow. If this is a story stock, there's risk there. I don't know. It's tough. It's certainly not quality, but I'd say the space race is on, and who knows what that develops into. Maybe this is all a big wild tech play. Maybe Tesla or SpaceX buys AST Space Mobile. I have no idea, but something that would be worth. I mean, would I throw a 0.5% risk at it? Sure. So that's probably what I'll look to do. I'm going to do a little bit more digging and see like what are the pros and cons. But right now, these premiums are pretty solid. I know I'm going out a long time here, but if price goes up, this $527 is easily going to become, a $2 debit, $1 debit. Like it would be very manageable. Okay. And YouTube user says, we don't actually know if their satellites will work. Correct. And that's why whatever you do on this stock would be a risk. So like I said, quality, probably not the best play. Opportunity, you never know. So I just wouldn't want, I don't know. I mean, it's up to you if you want to take that risk. So I think we can put a pin in that one, come back to it, but I'm going to write that one down. ASTS. It's not bad. I want to see what else is kind of lumped into, like what type of, space and in the story of the space race and whatever's being developed out there. I mean, if it's like satellite, like if it's broadband for space development to help us here on Earth, there's maybe a little more functionality. But if it's all like, no, they're just building networks for the space stations or building networks for, the billionaires that are going to space. I mean, that's probably good for billionaires. I don't know. Who knows? I think the reality is you got to be comfortable taking risk. And if you are, I would like to own it at 593 and see if I can survive the stock. But if it's a buyout target, you never know. All right. So let me keep going here. Dollar. We're still stuck in this noisy zone in the dollar. It doesn't want to go anywhere. Currency strength chart for today. New Zealand dollar on top. We got the Swiss, the dollar, the yen on the weaker side. We do have some risk off flows. New Zealand's been stronger. We saw this yesterday. Yesterday, the euro was the weakest currency pair, and New Zealand's on top. Today, it's yen, dollar, Swiss, and New Zealand's on top. Let me check and see. Oh, nice. Got another couple of bucks on the old Swiss crosses. So my Aussie Swiss looking good, CAD Swiss looking better, Euro Swiss looking better, New Zealand Swiss looking real nice. Dollar Swiss, not so hot. It's the same. I'm upside down a little bit on dollar Swiss, and then the rest just chillaxes. Yeah, but the Swiss pair is overall looking pretty good. Okay. By the way, Swiss National Bank has a rate cut on Thursday. Expected to cut rates by another 25 basis points. I would love to see the old Swissy here go way down over the next maybe 30 to 60 days and see if I can start hitting some profit targets on my Swiss crosses. So I will keep an eye on that. Dollar index, though, still chop suey. We will see what happens. Let me check something really quickly here on SPX. Just going to check the trade from this morning. Getting closer to profit. Okay, I need this to get down to about 250. It's close. Let me check my ES trade. 255, 270. It's getting closer and closer. Price is coming back towards center price when I took the trade today, around 570 SPY or 5,700. It was like 57.15 on the SPX. We're trading at 57.11. So another 5 points higher. This will probably be profit. But I took the trade off with a small loss at minus 30 cents just to avoid. We did break yesterday's low you know, it's just end up so far being a choppy day, which is totally fine. And then on my ES position, let's see if my ES, it's for this account here. 1, 2, 3. I'd love to get this thing just a little back into that profit trap. That profit trap would be sweet if we go somehow stabilize on the day. I need to check 57, 57.70, 57.75. Watching that price today. All right, that's on the to-do list. Oil still hanging in there.
Hey,
Frank,
Chris.
how you doing, man? Ooh, natural
Pretty
gas
good.
popping up there.
How's it going?
Good.
So you're looking
This
at
is
oil?
Yeah, so I'm just going through natural gas. This might be one trade that gets a little interesting. Natural gas is a slippery son of a gun. I would love to see some natural gas back down to the lows again and see if this just takes time to build. And this is kind of what I'm hoping for, is this just builds and builds and builds, and then we have, you know, more of a eruption in natural gas. But I think we can all see a potential head and shoulders here. Left structure, center, right shoulder. If we break this neckline around $3, natural gas could have a pretty strong recovery. I don't know. I'm not taking the bait. I mean, we've seen this thing mess around with all sorts of traders, and it's a wild and crazy instrument. But just be mindful of a potential breakout. That I could see natural gas going
I'm
higher.
hoping for.
Are you long natural gas?
I have Occidental Petroleum. They do
Oh yeah, me
oil
too.
and natural.
Oh yeah, speaking of, I do have to. Okay, so I did some work on Oxy yesterday at the end of the session, and I need to add in. I'm going to add in a very inexpensive covered call. So let me go to my positions here. OXY. OXY. So I have the shares. I have them covered at 54 out to October 25th. I believe that's just before earnings. Just before earnings. So let me check on. So earnings is November 5th. If I'm not getting it called away, let's see. I think what I wanted to do was this. If we go, yep, I've already got the trade already pending here. I was going to buy a $40. I was going to buy an out of the money put for 17 cents. It's going to cost me, I mean, it's not expensive. This is about $60 to protect 500 shares. And if price drops aggressively on Oxy to the low 40s, this should be trading for a decent amount of credit. So I think I'm going to do that on the shares that I own. So I think it's in that account and that account, that account. So all these accounts have the shares. Everyone else just has a little bit of exposure. But I'm covered at 54. I need to buy. I'm going to buy a $40 call for, let's see if I can get it for like 15 cents, hopefully. 15 cents on this $40 call. This would be 5 contracts. And this is for some protection. All right. So let's see if this will fill at 15 cents. Perfect. All right. 9732. You want it to come down?
Gold keeps running away. Yeah. I mean, if I had bought it yesterday, it would have been fine today, but that would have been chasing price. And
yeah,
I don't know.
Okay. All right. Need to do a quick
some
update.
analysts say, like, if you chase price, like if you buy at the all-time highs in the past couple of years, it's worked as a strategy. But I just think it's so risky, because then you have times like in late July on the S&P where we hit all-time highs again and then came all the way down for the next month.
Agree. I don't like buying highs,
It's
man.
always tempting. I did something though that's similar to that this morning. I took a bull put spread on the S&P, so it came down, and I took a 57.05 by 5700 bull put spread. So as long as price stays above that, I'll be okay. The premium was 205. So
okay,
kind of hoping that it can hold above that level. And if price comes back up to these highs like 730, 57.30, I'll probably look at a bear call spread for something else. But probably want to take it close to midday if price gets back up there. But if it's like 2 o'clock, premium's gonna be pretty bad by then. But yeah, I'm trying to do these 0 DTE plays, and I'm thinking the news week this week is pretty slow, so there's probably not a huge impact on things that come out because consumer sentiment came out. I don't really think that's going to drive the markets this week. I don't think GDP necessarily will next week. So I'm just kind of like looking at a range.
And what are we looking at here, Frank?
SPX.
SPX, okay. I just saw that I had a pending order on JD, and it was a max out at. I just got filled for 1760. I'm gonna try to get filled. Let me check and see what accounts have. I don't know if this is in everybody's account, but I might need to do some profit management here. So JD, I have a 13 call, and I'm selling against that a 32 call. So this one, and these are all puts. So the 13 by 32. Closing for 17.60. I'll let that pend. 13 by 32. 17.60. That got filled. 13 by 32. 1760. All right. So this is just some profit management. I'm into these for like a 14 something debit. I'm trying to get out for like a 1760. It may or may not work. I mean, this is showing a mid price at 1690. So it max out at 19. I'm way out on JD. So I mean, if I close this out, I'm just going to redeploy and start kind of my campaign trade on JD over again. I'm just going to leave that pending. So that's pending. This one got filled for profit. This one is pending. 13. Okay, this one here, I'll close out 1760. I'll let it pend. That one got filled.
Just have so many trades going on.
Who, me?
Yeah.
Yeah, I mean, that's why the spreadsheet
How do you
helps.
keep up with all?
Yeah, I just have to track them in a spreadsheet. I mean, the nice thing is I just search for them. I mean, if I take a look, it's not that hard. I mean, I look at if I go through my portfolio A to Z, I have them all like, okay, let me check on this one. If there's expirations coming up or positions and P&L for the day, then I just go to my portfolio or my spreadsheet, look up this the ticker, and then I usually type everything out. So it's like, here's what I started, here's what I've done to the trade, here's my break even, what do I want to do? And it's just a nice little refresher. So it's not that difficult. But yeah, it's a lot of stuff. All right, so that one closed out.
Yeah.
All right, so I want to look at JD again. I mean, this is a nice big move to the upside, which I'm happy to see. I think what I'm going to do again is if I take a look at this, I mean, it looks pretty solid. We are trading. I mean, it's a China play. It's China e-com. So 9.9 price to earnings, 0.3 price to sales. Fair value $60. We're trading at 32 right now. I think there's a lot of upside potential here again. Question is, do I want to just own shares or do I want to, do some puts? I think the reality is I want to do some puts if it's worth my time. I don't want to tie up a ton of capital.
Why JD? What's going on with them?
Well, it's one of the bigger like e-com games in China. So I don't know if JD has something to do with the Shein and the Temus and stuff like that. I mean, maybe it does. But it just checks a lot of boxes on like basic fundamental analysis. I like the discounted cash flow model showing that it's. I mean, if we look at it from, let me take a look here on FinViz and go to JD. And we have We have a lot of cash. We have forward price to earnings. We have price to earnings. We have price to sales, price to book. We have little to no debt. Looking, and I want to go future quarter growth. So let's see, insider ownership. There's some institutional ownership. There's a lot. I know this is one of Burry's favorite stocks right now. In his
Why are
fund.
they up 9% today?
So I think China cut rates. I think the big news is, let's see here, what's going on with Chinese stocks, Alibaba. Yeah, these are all. Let's check. It's something to do with like I think the PBOC just cut rates. Yeah, they're all up big today. I mean, I had a huge P&L swing. I'm up like 20 grand today on just China stocks. So let's see, stock gain after China central bank announced plans to slash. Are you long in anything like China?
86. I bought Baidu after its earnings. So I'm up now, but I think I got it at, maybe it was 89. Might have got it at 89, but now it's looking good.
Yeah. I'm long, long Alibaba, long Baidu. Those are looking good. So we have the PBOC announces plans to slash the bank's reserve requirement ratio by 50 basis points. Central bank will also cut 7-day reverse repurchase rate from 1.5 to 1.7. Alibaba rivals Baidu, PDD, JD also noted upward movement in their stock prices Tuesday morning. Electric vehicles, including NIO or NIO, XPEV, Li Auto, also up. So I'm not in the China EV plays. I looked at them. They're okay, but I did like the SPAC stuff back in 2020, 2021 on EVs. They worked until they didn't. And I do think that in the EV space, like China's legit. I mean, they're producing so many cars, and it's wild. I do wonder if the market share will be big enough, but I also wonder what Europe does with tariffs and imports, what the U.S. does with tariffs and imports. I think the U.S. is going to be a hard market to be like, yeah, we're going to accept, Chinese automakers when we've got Fords and GMs, Toyota, whatever is here in the U.S. that is just looking to. I know Toyota's a Japanese company, but I think it's going to be a tough market to crack when we'll probably tariff the crap out of any Chinese car that comes in here. Alibaba also teams up with NVIDIA to supercharge EVs for Chinese automakers. Like there's just good news coming out of China, and it's about freaking time. But we'll see here, like Chinese stocks defy Biden's auto import ban concerns, rally to 4-month highs, central banks unexpectedly slashes interest rates. So in line with the Fed, China's like, okay, we'll play ball. So I think that's just part of the big news is cheaper money, more accommodative central bank, and there's ways to express that. So I want to look at some fresh positions on JD. I've done a lot of credit spreads here and had, since we had the lows in the 20s, long calls have worked out nicely. I've taken profit a couple of times. Credit spreads worked out pretty nicely. Overall, my trade on JD, if I go to all the accounts here, I'm up like $8,000 on the year on JD with hopefully a lot more to roll into that. But I want to get some fresh positions on. So let me take a look. I'm definitely willing to own the shares. I want to see, maybe some here in like the $25 or $6 area. I could just add some shares now and then just dollar cost average in. If I just take maybe a $1,000 to $2,000 position, that wouldn't be bad. There's so much upside potential here. So if I did, let's say I do a $2,000 stake, and that becomes, I don't know, 2,000 becomes 6,000. It's not too bad. If I did 2,000 now, 2,000 in the low 20s, that'd be $4,000. Break even at 25, $4,000 becomes 12 to 13,000. So just thinking about maybe just buying some shares, but I'll probably express it first with an option. Let me see. So let me go to JD right here and look at the trades. So if we went out towards the 90-day window, could I generate some income? If I did, I can just buy some shares. And then if I really want to own some of those shares or said shares, where can I go? Let's go out to, I'm going to do a leap on this. I'm going to go out to September. It's a 360-day expiration. I can get $1.50. I'm going to do this, Frank. I'm going to go 27, 25, and willing to own 200 shares on my margin accounts. If I don't if price goes higher, then it's $400 that I'll probably take like 90% of the profit. If price falls back, then I could potentially take some ownership on those shares. That is a long ways out. A lot can happen, obviously, in a year. But if price goes higher with this bit of a melt up between the U.S. and China, if China actually gets its act together and we start to see some China stock rally, that's a good thing. But this is a nice way to generate some income. So it doesn't tie up a bunch of buying power. I'm going to go ahead and take this trade here. 27 and 25. These are sell puts. Hopefully, I can collect more than what the bid price is giving me. 188 plus 1.62. So 350 is the bid price. I'm going to try to get $4 or better for it, hopefully. Let's find out. So let me throw this trade in. 27 and 25. That would be a decent discount, by the way. If I put in my first put at 27, $27 gets me at ownership. That's a 17% discount, 16.67% lower. I take the sale on that. And then if I buy some shares, I think I'm just going to throw in, I'm going to throw in like $1,500 right now. So everyone's going to get some love on JD. We're trading at 32.48. 32.48. Take a $1,500 position divided by 32.48. I'm going to buy 46 shares for everybody. So if I just go long the stock, go and buy 46 shares, 32.50. Okay. So everyone's going to get it. There we go. So $14.95 buying power. That's fine. Filled at 32.50. All right. 60 seconds. I'll have all these filled. Or it goes up in price and I don't get it filled. 51. All right. There we go. So 46 shares across the board. Next up. All right, dude. So I'm building a little campaign trade on JD.com and adding a little bit more to my China play. It's e-com, it's tech, it makes a lot of money. If the PBOC is going to be a little bit more accommodating, then that's a good thing. So I'm in for 32.50 and 32.51. I know it's in here for my calendar spread. Looking to get that called away. I'm going to add in kind of the new campaign here. So, all right, let's add to this. So JD there. Adding shares. Oops. And if anybody in the A1 Trading Discord in my section wants to add in some dollar cost averaging on JD, that's what I'm doing here. So I'm adding by $1,500 position at 32.50. And then I'm going to look out a little bit further for that leap. If we go September 19th, I do a 27, let's see, 27, 25, 23. So I can get over $5. This is going to be on a margin account. So let me switch this up here. So buying power doesn't take much. And if price goes higher, I'm just going to take about 90% of that profit. So $520 times 0.9. I'd grab a $468 profit out of that one. If price goes higher, that works in my favor very quickly. It might take, a month or 2 or 3 months, but if price goes way higher, that's an easy income play. But if I own the shares, obviously that's why I want to buy it just to be safe, and I can take another stake in that. But for these margin accounts, I will probably be willing to own a little bit more. If I get assigned, what would that be? So that'd be 27. I'm sorry, I'm just literally talking out loud here, Frank, but I'm interested in
You're good.
taking some trades here. So 24.78 and $1.70. So 25 minus $1.70, 23.30. I'm just looking to see if I take some ownership, what's my break even? And then 75 cents minus 23 would be 22.25. All right. So if I took 300 shares, 24.78 plus 23.30 plus 22.25 divided by 3, I'd own them at 23.44. So would I be interested in owning JD at 23.44? I would say the answer is yes, because we have these lows at $21. I can certainly work some covered calls on that to repair it. So these trades are going in, my friend. 27, 25, 23, showing right now a bid price 2.30 plus 1.70 plus 0.79. So I've got 479, and we're trading for a 532 mid. Hopefully I can get 5 and change. I'm going to try to get 525. 525, survey says. Filled at 556, even better, even better. Nice. And then
PEOC only cut by 0.2%.
0.2%?
That's 20 basis points.
Oh, yeah. I thought they were cutting. I thought they cut 0.5, or maybe they hinted at cutting 0.5.
So this says this was 8 hours ago. They cut by 20 basis points to 1.5%. They were at 1.7.
Ah, okay. Adding sell puts. So if you don't want to own the shares, depends on if you have a margin or cash account, but I'm doing a $27 sell put for 2.34, a $25 put for 1.70, and $23 put for 0.98. And then the total fill was 5.25 credit overall. Look for 90% take profit if price rallies, or be willing to own at 23.44, which I am. Okay. So Frank, you want to kick around something while I type that all in? I'm going to get that in the Discord channel. If you want to grab the screen and share something, I just want to get all this stuff posted. This will be in my stock and options portion of my alert section.
I'm trying to figure out what is going on with China, because it wasn't a huge rate cut.
Yep.
But
it's at least
an article about
it's better than nothing though.
Stimulus going on.
Yeah, it's better than nothing. I think that's been the missing piece in China has been they've done nothing. Like I've said this for over a year. It's like China to me technically looks really good. They are not growing with debt like we are in the U.S. And I feel like if they just do anything hinting at accommodation to real estate, to the tech market, then China can take off in a pretty big way and help the global economy. So anyway, that's why, I mean, I'm early. I get it. Like I've been in early. I mean, yesterday I said this early in my session. I looked at, P&L for the year and stuff, and I've had almost zero profits in China and almost zero profits in Bitcoin. And I'm up like, 16%, 15, 60% net for managed accounts this year without having two of my bigger campaigns actually like do anything. So there's been a lot of grinding, but it'd be nice to see some China take off, and that helps maybe boost my bottom line by, I mean, I don't know, man. I could probably get some China plays that boost my bottom line by 5 or 10%. I would not be upset
I don't think the government would necessarily step in and acquire a company. So like people are afraid of, companies disappearing because the government can just step in.
Everybody's afraid of China.
What I think China kind of put themselves into this sort of environment. They kind of brand themselves as somewhat of a ripoff. So like, I think a lot of their companies, like you think of like companies, Temu.
Yep.
It's like this very cheap marketplace where you can buy stuff that's usually way higher in price. So those types of things, I guess sort of make this brand for Chinese companies that, you can get things for cheaper off our platforms, but they're actually really just terrible quality and they don't last, and they're not really what they market either. So I think maybe they've put themselves in their own hole. But I think companies like Baidu, Alibaba, JD, they're all good companies, but that China kind of gets them. They put themselves in a hole. I don't know however else to say it, but I think people just think it's like cheap or a rip off or something. But
Sure.
I don't know.
I had it. So I was
Stimulus.
at a dinner in Florida, and we had this conversation about Shein and Temu. What's crazy about the logistics of these companies is they can do something almost within a day or two, from like zero to concept to shipping within like 2 to 3 days. So what happens is, think about like the Taylor Swift Eras tour, where everyone's paying, $500 to $2,000 to go see Taylor Swift all over the world, and one of her outfits pops up online, and in a week you can get it, and it's going to be like $20 to $30 instead of the thousands of dollars I'm sure that she's getting her custom outfits for. And the reality is, like, I don't think people think about it as high quality. I think people think about it as, I see that it's trending, I want that. It's like the instant gratification of retail, but their logistics are incredible. Where if they see something and they clone it and they ship it, you can have it within a couple of days. And it's like, to me, that's insane. And it's also like incredibly impressive. So I get it. Like, I haven't bought anything from Temu or Shein or whatever, but I see their ads everywhere. And I know that it's a legitimate competitor to Amazon right now. But again, it's like, are you buying it for quality? Absolutely not. Are you buying it for something that you could like have today and trend and then discard it? Like, it doesn't ever matter. It doesn't matter because it was a $20 purchase. A lot of people do that stuff. So I don't know. I just think it's interesting. It's certainly disruptive, but I mean, the fact that they can turn something from concept to fired up online to making it is really impressive. All right. Willing to own, if assigned. I'm just finishing up my post here. If assigned on all puts, the break-even price is 23.44. All right, so let me get a post here for the picture of JD. I'm looking to own it in here. So I bought shares at 32.50, and it's already up a couple of cents, which is good. So $1,500 buy at 32.50. And then I'll get a little box in here for my 20. I did a 27, 25, and 23. So 27, 25, and 23 gets me some additional exposure there. And then a 27 by 25 by 23 sell puts for 5.25 credit. 90% take profit if not assigned. And willing to own, break even 23.44. And that'll be my picture for the alert. All right.
So
and also I noticed on my diagonal. Yeah, go ahead.
What is this? This is 3 legs, or are they all just 3 separate trades? 3 separate.
They're 3 separate trades. I'm just putting them together. I got filled on all 3 of them together for 5.25.
Okay.
Yep.
Gotcha.
So if you take them individually, I posted the individual like credit. So the $27 sell put filled for 235, 25 filled for. I think I got a little bit extra premium on that because I think they only added up to like that's 518. I don't know. We're gonna see. I'm gonna find out. So
that's pretty good.
Overall credit. There we go. That's the same thing. All right, this one could be deleted. That's meta. Oh, fudge. Hang on. Sorry. Let me just add up the credits.
With that,
Yeah, go ahead.
I just have one more thought because I don't think there's going to be much happening this week. Other than gold, if it can come back, that would be great. I'd like to buy it. But S&P, so ever since I took that trade this morning, we recovered pretty well.
Yep.
Price is still steadily climbing. In the next hour or so, if we could get back up to 57.30, I might look to take a bear call spread. So kind of trap price where it is.
Okay.
Hopefully
on what you want to go? SPX?
Yep.
Okay. So on my screen, and honestly, I hope price stays right where it is. If price finds a way to just kind of hang in here for the day and we have like a down to up, I'm right in my profit trap on the ES trade that I posted last night and this morning. So this is a good level for ES to hang out for the day. This should be, I think max profit will be around $200. So I was looking to make about $50 on the trade. If it stays in the profit peak and this has to be later in the day. Like this is going to be like probably 2:30, 3 o'clock this afternoon. But if we stay in this profit peak, awesome. If price finds a way to go higher, I still get about $50. If price comes into my trap here, there's, $100 to $200 of max profit. So I'll keep an eye on that for ES today. All right. And then Frank, you want to look at, you're looking at like a bear call spread. You think are going to maybe come up and like poke the high and just kind of hang out for the day?
I mean, we'll see. I don't really know.
Okay. If you want credit, dude, for some of these credit spreads, it might be more risk, but if you look at this level for a sell call, or what were the legs you're looking at to do a bear call spread?
57.40 and 45, I guess.
Okay. So 57.40 by 57.45. Okay. So let's take a look at that comparison. JD got filled again for 1760. Okay, good. All right. I want to go to, so here's SPX. Let's go NDX. Because you could do this. I'm thinking on NDX. I mean, this is the not all-time high. This is Thursday's high. Maybe a 19,950, or I mean, I don't know. I'm curious on NDX if you get more credit. So just, I guess I want to look at both of them with you. So if we did the SPX trade. So for today's expiration, 57.40, that trades in profit. So that was a 295 down to 250 profit target. Is now decayed all the way down to $1.15. Came right back to center. All right, SPX, if we did 57.40 by 45, so you get 45 cents on it today. You're trading with about a 80% probability right now. I don't love taking the trade at 50 cents, but
I don't either. I'm trying to wait.
Yeah, if it were to, let's say price were to flirt with it a little bit, and this trades for like $1 or $1.50, there's two ways I would think about this trade. If price comes up towards it, you can obviously get a little bit more credit if you wait and price actually gets closer to 57.40. The other side of that is if price comes up here and you move this out farther, you can still get that 50 cents and then increase the probability later in the day to grab, I'd say a higher probability 50 cents and have that trade less threatened. So like if the trade you're talking about right now is trading for, let's say $1, if it's trading for $1, I would even go up another couple of strikes and then take the 50-cent trade and see where the probability of profit is. Because it might be, 85 to 90%, and you can still get $50 on the day, and that's a pretty good grab. So anyway, just thoughts.
So a seven. Oops, switch to puts. Hold on. So if I do bear call spread right now. Okay, yeah, never mind. It's still at 55 cents. Yeah, so I guess I'm just gonna be patient. I'm gonna wait and see where it wants to go. It's just a steady. It's a steady climb. And
it is.
If we get up there, yeah, I'm tired this morning. If we get to 7:30, then we'll see.
Okay.
I don't know.
All right.
But
I'm gonna set a chart alarm.
I'm just running out.
Yep. Let's go SPX. I'll set a chart alarm at the high, 57.30. So let's see if we get to the high, and then check for Frank's bear call spread. I'll set a chart alarm for you. So for the rest of my day, I'm looking for basically my trade to manage is going to be ES. If it's in my profit trap, hopefully that will stay there. If it goes further up for the day, then that's easy profit for $50 a contract. If it's profit trap, then we're getting about $200 a contract. That's a pin price. That's rare, but if I get one, fantastic. So let's see what we get. That'll be
Nice.
here. So I'm just going to watch and see if it stays in the profit trap for the day. If it goes back down to retest the lows, that's no good. There's my risk, about $190. But profit trap 220 plus, and then $50 on the tail credit. So yeah, we'll see what happens. Overall,
I really hope it doesn't.
Price hasn't done much today. I would like to see price just kind of chill and do nothing and just kind of hang out. And for the day, it's a down morning up, and then it just kind of balances out, and nothing really does anything. Now I'm looking at live gamma levels. I mean, I do have a strike up here that's starting to fill up. This was around 300 this morning. It's at 633 net. So the 571 on the SPY could be tested today. That helps my ES trade. That drags the SPX higher. That might put your trade in the window of maybe executing if you're interested, Frank. So there's some gamma levels here on the SPX. The opening bell high was around 57.31. We do have a gamma level up here at 57.50, but I think we just kind of hang out, maybe in this area for here. We just kind of hang out for the day and maybe be about like choppy. So we'll see.
Would be nice.
So all right, man.
Okay. Well,
anything else? I'm just gonna go through the portfolio A to Z and just see what else I can do. It looks like I've got a lot of my JD trades closing for profit. The 1760 diagonal spread, it was a max of 19, closing out for 1760. I'm gonna double check and see how many of those got filled. So this one does not have any JD exposure. This one closed out for, so this one, where's it at? 13. Yeah, so that one closed out for profit. Right there. Very good. This one closed out for profit. 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 Closed out for profit. And boom, closed out for profit. Okay, so those diagonal spreads have been closed. Now I added in the 46 shares at 32.50. I put in additional trades with my naked puts, and the JD core position continues to run. Right now, up about $8,200 year to date on JD, and hopefully there's double or triple that to come. Could be longer, but I'm willing to sit on this stock until maybe $50 or $55. So that alert was posted in my stock options trades section. That was the most recent one. Willing to own the shares, $1,500 position at 32.50. Selling options for ownership if assigned. Put the legs in there, and then where my break evens are at. So if you like it, cool. Somebody mentioned up ASTS that I'm going to do a little bit more digging into. I also thought about putting in another kind of campaign trade with some, I don't know. I think that the Dow probably has most of my interest, and the S&P over the NASDAQ. And I hate to say that because the NASDAQ has been by far and away the best performing index over the last 30 years, like not even close, but it comes with a lot more volatility. I'm just wondering, when we see the S&P utility sector leading the way, we see gold leading the way. I do wonder if we're like late in this cycle of like 2021 to 2022, like tech turned over first and then it took over everything later. But obviously tech can have like a last minute boom, and the NASDAQ does have room to get back to the highs. So I don't know, Frank, do you think the Qs are going to hit highs? I think they certainly can. I mean, S&P's at all-time highs, Dow's at all-time highs. They hit highs again. We're only like 6 or 8% away, not even 4% away. I mean, the NASDAQ can make that up in a week if it wants to. But yeah, we'll find out.
I can think of a million reasons why it shouldn't, but that would probably only reinforce the bulls to take it that high.
That's true, because it's the pain trade.
Blindly buy things.
That's it.
And it works out somehow.
Yep. That's what I'm going to do. I'm just going to buy. Just kidding.
But
yeah,
the thing I'm doing right now is like, I'm trying not to risk it. I don't really want to be participating at like this euphoric level. And so I'm trying to do these, credit spreads. So I'm like, okay, are we really going to go this low today, or are we really going to keep climbing today to new highs? And are we going to really bust through 57.40 or 50 today on absolutely no news? So I think that's just where I am, and just kind of establishing a zone and hopefully, collecting premium and making money, even if we go up or down.
Yeah.
Just, I don't know.
Yeah. This is what I keep coming back to this. You'll see me reference this chart a lot for the rest of the year. This is price to sales historically since 1995. Any big crash that we've seen, we started to peak out here, crash 2022, our bear market. It wasn't COVID. COVID was here. This was our price to sales, where we peaked out. So if we had a little bit more upside, there might be some more in the tank to kind of run those levels, and I definitely be getting a little bit more protective. I talked about the AAII sentiment report today. We're pushing a little bit high into the 1 year highs of the bullish sentiment, and that tends to be a bit more of a contrarian play. That was a crazy switch. Like from July to August, we saw that like 50 something percent on the AAII drop to like it felt like 60%. And it was a huge change within a week. And then the sentiment just picked right back up, and we're sitting here talking about this at all-time highs. So anyway, this is one thing I'm watching, and also the price to peak earnings, same thing. We're not as rich in valuation as we were back in 1999 when we had the dot-com bubble, which is where I think the tech market can go. So I mean, if we're talking about NASDAQ or talking about the tech market can maybe get through the 2022 highs and then get back into the dot-coms, but I mean, nobody knows how many points that equates to. I mean, we could see another, on the Qs, we could see another 10% higher. We could see another 40, 50, 100 points higher before we come into these like lofty valuations where it's like, okay, tech is now crazy expensive. But I don't know. I think it's if you're willing to buy it, I would say I like collar positions where if I was willing to buy it, I'd have like a $5 or $10 out of the money put and a $15 or $20 out of the money call, and I would collar the crap out of this thing. If it goes higher, great, I make more money in the upside. If it goes lower, we protect our downside to the best of our ability and lower our cost basis. But that's what it has to be, is just if you're willing to own it, know your break even and how to improve it. If I buy the Qs, I do not want to buy it at 484 and say that's my break even. If I buy it at 484, I'm going to add a call, I'm going to add a put, and if I'm right, it gets called away and I make, maybe $10, $15 a share, and I'll do the same thing. I'll add a call, add a put. Now this is a sell call and a buy put. So it's a collar trade. So that way I'm protected the downside while potentially getting the shares called away with gains. But I'm trying to finance those and maybe even get a slight, higher premium on the call side. So that's what I would be doing, is like, that's the campaign trade that I want to make sure that my overall position is not getting crushed. Because if we have some type of, I don't know, I mean, Qs look like if we survive this area here, Frank, I think the Qs are they have room to run. We get to this high again, we blow this high off, resistance here. I mean, we could be talking 60 points higher, 80 points higher before I would say, okay, now I'm looking to get a little bit more bearish. So it's not a bad spot. I'm just thinking, if I get the stock called away, I'm just trying to make sure that there's more upside than downside. That's all. So, all right, man.
Yeah,
It's
I think
11:30.
very crazy.
Yeah, it can be nuts, and it seems to be euphoric. I'd say, cautiously bullish. The market loves the melt up. Data is important. Today's consumer confidence, even though it was a terrible print, didn't really rattle the price action. It was kind of a nasty price action day. I mean, it's still positive on the week, but today did open high and then close below yesterday's low. So that was a pretty tricky move to test both sides, and price ultimately is going nowhere. So for me, for the ES trade that I have, I hope it goes nowhere, because that's my profit trap. If it goes higher, that's fine. I'll keep the profit that I put on initially. If it goes lower, then there's some risk on the trade. But if it stays where it is, that could be a good day. And we'll come back and do it tomorrow.
Cool. Yeah, sounds good.
All right, dude. Okay.
All right.
Thanks, Frank.
Good luck today.
Thanks, dude. We'll talk. All right. See you, everybody. Thanks. Have a good day.
Thanks for tuning in to today's A1 Trading Show. Make sure to subscribe and to turn on post notifications so you don't miss the next one. Also, we're looking for more guests to come on the show. If you're comfortable being on camera, have trading experience, and you're looking to grow your audience exposure, we'd love to have you on. In the live stream chat and description below, we'll drop a link to apply to be a live stream guest and join in on the conversation. We hope to have you on soon. That's all for today. Trade safe, and we'll see you next time.